Hello and welcome to Indianomics. This edition comes from the Neemrana conference, from the sidelines of this economists conference, and I have with me one of the foremost economists of India, Professor Arvind Panagariya. Dr. Panagariya, thank you very much for sparing time for us. In fact, you have come to India at a very interesting juncture where we have seen the Fed pivot to dovishness. So my first question to you is really about how you see the US economy next year. Are you also in the camp that we should expect quick rate cuts and maybe 3 rate cuts?
It's very difficult to predict what the Fed will do, but certainly, it has announced that it is going in the dovish mode. Whether it's going to be 2 cuts or 3, but it's going to be somewhat relaxed monetary policy now in the United States.
But that would presume that we are going to have a soft landing, that it will not be a recession.
Yeah.
Are you confident that at least we will not have a very deep recession?
Well, look, I've been hearing about this recession for ever since the COVID sort of ended, and the speculation was always, and each time I have come to India, I hear about this recession happening, but it hasn't happened in the U.S. economy, and particularly, every month when the job numbers came in the United States, 100,000 or more,
yes.
Being added continuously. And so when people ask me here, my counter question would be, where is the recession?
Yes.
And so I certainly think that, lending will be soft. It has been, in a way, quite a bit of time has already passed.
Yes.
And therefore, because recession has not happened, we are still talking in terms of, is it going to be lending? But the lending, I think, has happened already.
Okay, so it has been a soft landing, you would say, at least so far. So how do we look at next year? Do you think it will still be a year of strong growth, reasonably strong global economy?
Well, certainly the United States. Now, European economy is not doing as well. We know Germany, for example, is not in a great situation. On the our side, the Asian side, Japan is not doing still very well. But the United States economy certainly is kicking quite well, unexpectedly so. The usual kind of long-term growth rate in the U.S. that you've been observing is about 2% a year. But
the last number was 5.2.
Yeah, so the last number was quite incredible. So I don't think we'll get there. But the fear I have really is that, the inflation rate is still at 3%.
Yes.
It has not returned to the 2% level, which is where it has been for several years. Fed is loosening, and so, could it revive inflation? I think that is the main fear I have. Okay. But, on the recession side, I don't see a reason to be concerned, because in a way, loosening the brakes on money would actually move the economy perhaps to a faster growth.
That's true. Okay, now the reason why I'm asking you this is, what should we be prepared for in India? We've had a stronger than expected 7% growth according to RBI forecasts in the current year. Next year, should we worry that global growth will take away some?
Yes. First, to claim some credit, the growth rate has been stronger than expected by some. I had been saying it is going to be higher than 7%.
I recall that, and many congratulations to you. And I was wondering at that time that you were almost, a sole voice claiming that we would do 7%. I was really surprised, but kudos to you.
So for us, I think, I see prospects very good. For a number of reasons,
I'm speaking of FY24. You think it can continue to be a good year?
Yes, I think so. Well, FY24, meaning...
okay, is this, sorry, FY25, do you think? Or, the worry is only that there could be global slowdown pulling us back.
Yeah. So, at least the U.S. economy, I don't see is about to slow down. I also have a little different view on this, that even the global economy slows down, if we have our house in order, I don't see a reason for us to slow down because after all, the global economy is extremely large. Our problem is not whether the global economy is rising fast enough. Our problem is, can we really try to get a larger slice of what already exists? It's a very large market, and therefore, our effort has to be to get a larger slice of the global economy. There are other factors which seem to me to be working quite favorably now. First of all, when the U.S. interest rates begin to drop, evidently foreign investment will return in larger tranches now. So the initial bit of higher interest rates moving capital out of India into the United States, that phase is over, and I think the reverse phase will begin. That's one factor. The other set of things are that the balance sheets of our own companies and the banks are now in fantastic shape, actually. And I just came from the Reserve Bank of India and had some conversations there, and apparently, the news from there basically is that the banks really have come back very strong. So investments, I think, the corporate investments would be doing very well in the years to come.
I'm coming to the domestic story in just a minute. My only point is, I was first wanting to understand from you what kind of slowdown the global economy might impact on us. One, because our services exports, which was doing very well, is now plateauing at about $28 billion a month. It's not going to 30. In fact, it was 30 in January. It's now averaging at 28 billion. It's not growing. And secondly, you can see software companies, all of them dragging their feet. So that's why my question to you, whether the global scenario can cast some clouds.
Macroeconomists in India, like to watch, as elsewhere, like to watch every month. A lot of this anxiety, angst seems to come from watching the monthly figures.
Monthly data.
And I sort of really think a little longer term.
Okay.
And I'm not swayed by, figures in a month or 2 months.
I will come to the longer term questions on services exports as well. But first, let me finish with the near term. Now, one of the reasons why we've been able to do very well is that government capex has been strong. And government capex has been strong because we've been taking the liberty of higher fiscal deficit. This year itself, 5.9% for the center, 3% for the states, is nearly 9% general deficit. And it has been even more. It was 10, 11% in previous years. So we've got a 7% plus growth when deficit is 9%. We have to bring it down. So do you think that there can be even internal breaks to growth?
First of all, I will contest the assertion that this is largely the story of the government public sector capex rising. That has been rising, no doubt. But all said and done...
Government capex rose dramatically this year.
Yes, it's dramatically, but what is the share of the government in the total investment?
Yes.
It's not very large. And so, even if it doubles, from 2% to 4% of the GDP. And it's only the central governments, So, if capex is rising, which seems to me from the figures like, I haven't checked the very recent ones, the second quarter figures that came in, but before that, we were at least 34%. Now, that's obviously cannot happen because of the
government alone.
Yeah, because the government capex increase is at most 2 percentage points of GDP.
Yes.
But the rest has to be coming from the private sector. Pretty clean now.
Third balance sheet for the economy, household.
Yes.
Household savings have been falling.
Yes.
Net household savings 5.1%, the last number from the Reserve Bank. Is that likely to be I'm just throwing obstacles.
Yes.
I'm trying to be devil's advocate.
Yes.
Would that be a worry?
Yes. I think there has been a bit of a longer term trend there. And we do need the household financial savings to rise. I think, that is a weak spot. It has been there. It's not a new weak spot. It has been there for a while now.
No, let me stop you, sir. At the NCAER Nimrana conference, your colleague Poonam presented a paper where she pointed out that this is the first year when household savings is less than government borrowing. Government borrowing is 6% of GDP. Household savings has gone down to 5.1% of GDP. So there is a bit of a bother there that household savings is not even able to finance government.
Right, but wait a minute. So I have to understand those figures. I mean, is it because the household savings has fallen as a percentage of GDP, or
No, household debt has risen, she said. So net household savings has
But
fallen.
in the end, you know, the government has been borrowing a lot more than in the past, right?
Yes.
So that equation may be off simply because the government borrowing has expanded quite dramatically.
Basically, you're saying that you do see a next year and a medium-term growth of 7% as possible?
Oh, of course. 7% most certainly.
Okay.
I think, you know, we'll have to pack up and leave if we can't grow at 7%.
7%. Okay, well, let me take a break on that optimistic note, but I'm going to come back and ask some medium-term challenges from you. We are back in a minute with more questions to Professor Panagariya. Welcome back to this special Indianomics with Professor Arvind Panagariya. He was heading the Niti Aayog until recently. Now, of course, continues to be Professor of Economics at Columbia. Professor Panagariya, thank you very much for your patience. The medium-term challenge for the economy could be AI. I mean, we don't know how artificial intelligence will pan out, but the fear is that it may take away accounting jobs. Now, our services exports are all in those areas. So would you worry that AI can put some brakes in the medium term?
So, look, you know, this will still have to unfold. We don't know exactly how it's going to work out, but all the past episodes I have known of innovations which sort of result in automation and supposedly therefore a threat to jobs. In the end, the aggregate level of jobs seems to remain unimpacted.
Okay.
I mean, you know, you can look up, go back when the laptops began coming.
It only
afterwards,
increased.
internet. You know, the nature of jobs changed. We had a lot of, we used to have many typists. Typists were replaced by, you know, different
More
kind of
data
skills.
programmers,
Yeah,
yes.
you know, data programmers or different, you know, folks with different skills. But I've never seen, you know, automation leading to aggregate loss of jobs. It requires
Change in the nature.
So it's change in the nature. So it creates pain points for sure. You know, people who at least temporarily may be displaced, may have to go in and retrain, etc. But in the end, the impact really, and especially once we get to the medium term, impact has almost always been positive. You know, in the end, we have ended up with higher productivity and therefore higher incomes.
To come back to the other medium-term challenge, of which we have very little confidence, climate. Do you think that can reduce potential growth, both Indian and global potential growth?
Well, look, this challenge has been with us for a while now. And so far, I don't see that it has led to a slowdown in growth. Certainly not something that can be actually directly attributed to the climate change. Once again, it's you know, where investments go, that will change. What kind of growth happens, which sectors grow faster, which sectors grow slower. All that will happen. Right? But, you know, on the one hand, if fossil fuels decline, green energy will rise. So, you know, again, I don't see, you know, little things one can observe. In the end, for me as an economist, I want to look at, well, what does it all add up to? And when we add it all up to, I don't see that this is again going to derail anything in any serious way.
Hopefully the Homo sapien will solve the problem.
Yes. Well, we have done that. I mean, we have done that. So,
yes,
you know,
certainly. Let me come to the more medium-term problem, or perhaps even more near-term, of the change in geopolitics. Now, we are seeing every country building barriers, and, you know, industrial policy has returned with a vengeance in every country. But are we doing the right thing? We have started going slow on PLIs after a bunch of them. But is that the way to go? Raise tariffs, give subsidies. do you fear that we may create inefficient firms?
Yes, I think, that's something I have said for a while now, that in the end, particularly when you do it with protection, see, subsidies worry me a little bit less. They are also a source of worry, but less so, for the simple reason that, you can't sustain subsidies for a very long period of time and you'll have to withdraw. And the firms themselves also know that the subsidies will eventually go away. So, so any big thing happens, for example, things like Foxconn coming in, I think they're very happy that they're getting the subsidy, but I don't think that's what is driving them. I mean, a large manufacturer such as that will not come attracted just by the subsidy. Because they have a time horizon of 20 years, 30 years, 40 years. They are looking at the global marketplace. That's where they would ultimately want to sell. And the subsidies for a short period of time are not going to solve their long-term problems. So that worries me less. But I think protection, when we impose tariffs, that actually has a tendency to stay because it generates revenue. So therefore, the government is never under pressure to withdraw them. And a lot of small firms enter, you see. And particularly...
And then there is a lobby to continue the subsidies.
There is lobby to continue, and there is also just general fear that, if we now remove this protection, then the firms will go out of business and will have unemployment and all, Policymakers don't think in terms of
reallocation. So you think we should ration PLIs or avoid these kinds of policies?
I would, because look, it is also an issue. Both protection and PLI we ought to avoid for the simple reason that, you can create certain sectors with these instruments, but you cannot, I don't think you can actually grow manufacturing overall.
Okay.
And that is the crux of the matter, that, everybody will have the ability to claim successes, that look, we did this intervention and such industry got created. My issue really is that has it resulted in a larger manufacturing sector overall?
Okay.
I mean, if I'm really creating these sectors, expanding these sectors by moving capital from some of the other sectors, then the other sectors are paying for it. Yes. And I'm not getting any far with overall manufacturing. And what India really needs is for overall manufacturing as a proportion of the GDP to grow and grow rapidly. We cannot grow with this 5%, 6% kind of manufacturing growth. We need 12 to 15% manufacturing growth, That is what most of the successful countries like South Korea, Taiwan, China, Singapore, they all did that. 12 to 15% growth in manufacturing. That is what we need to put out. And that requires putting all the reforms in place. In the end, we are not going to get there.
What would they be, sir?
There is a set of labor laws which have been enacted by the parliament but still not implemented. We ought to go in and implement those. I think now, probably this will happen after the May 24 elections, but I think that ought to be very high up on the agenda. And then, my view is that on some of the dimensions, these reforms don't go far enough, but they do provide space to the states to carry those reforms further up. So we'll need to, encourage at least half a dozen of the states to take these reforms much further. I think we cannot really capture the global marketplace through
unless we are
tariffs,
competitive.
unless we are competitive, and the only way it can happen is if we open up, give the level playing field, because remember that protection is given only to the import competing industries. That's where it is, industry, there is an export industry, you can give export subsidy.
Yeah.
I mean, the instrument that you use to stimulate the export sector is through export subsidy, which hardly anybody ever gives.
Absolutely.
And so it automatically puts the export industries at a disadvantage. And if you're going to export less, there's no way to import more. I mean, there's not, you're going to cut imports as well. So you're de-globalizing.
Yes.
I mean, ultimately, this results in deglobalization, and that's not something what we need. And finally, I think we need a bit more focus. There are a lot of pain points in the system, and if we could really address these pain points for the entire economy, well and good. That's the first best. But if we can't do it, let us, I have advocated these coastal zones or whatever, these employment zones. and try to solve these pain point problems within
enclaves.
Within enclaves. And if we do that, then none of this other kind of support, the whole thing is that the industry comes in and says, I've got this 15% disability. And so then we give them the crutches of a 15% tariff or a 15% production subsidy. But that's not the way to really stimulate the manufacturing sector.
Fair point, sir.
Professor Panagariya, thank you very much for sparing time for us at CNBC TV 18.
Always a pleasure to be with you, Lata.
Thank you very much for watching this special edition of Indianomics.